Hey everyone, how's it going? This is Richard, and welcome back to another Stock Market Outlook video sponsored by MarketSmith. As always, we're going to run through the major indexes, key stocks to watch, mega caps as well. At the very end of the video, I'll give you my overall take on the health and breadth of the market. And if you do find my analysis helpful at any time, please go ahead and just take a few seconds and leave me a like down below. It helps me out immensely. And of course, subscribe if you want to see more videos just like this one every single week. With that said, let's go on over to the Nasdaq Composite and start with that index. Keep in mind that this past Friday was OPEC, so this volume is going to be skewed. But regardless, we're back below all the moving averages, and pretty much we're doing exactly what I didn't want to see. We sold off ever since this gap up on the 13th, and fall through to the downside below the 21 EMA, below the 50, and now well below the 50 as well. And we remain below a declining 200-day moving average, as well as this declining trend line right here. So this is just kind of a telltale sign of distribution that this was being sold into, and basically the Fed news did nothing to help that fact, and we're just kind of back below this trading range right here. So it remains to be seen whether we recover this quickly and get back above the moving averages, or if we start another leg down. That's definitely a possibility, but you should basically keep an open mind and be ready for anything. I know based on feedback on my personal trading and how I was stopped out, that things weren't working quite right in this area. And for me, it's best to be in cash or looking for short opportunities during this time. So that is the Nasdaq Composite on a daily chart. Let's go quickly to a 60-minute. Draw that same type of range here. You can see we gapped up just above this range, sold off immediately, rallied slightly, and then once again reconfirmed to the downside, breaking through this low and gapping down and following through. A little bit of a rally here, but in the context of the longer term trend, the higher time frame trend, still nothing to be too excited about, and it remains to be seen what that short-term trend will be. Going back to a weekly chart, you can see that we had a downside reversal week where we, obviously gapped up here, sold off hard, and closed right near the lows. We remain below that longer-term 40-week moving average, and we just basically continue this bear market that we've seen pretty much since, the start of this year, and even going back to fall of 2021. So that is the Nasdaq. Let's move on over to the S&P 500. It's going to be a very similar story. On the longer term time frame, you can see we're rejected at that 40-week moving average area. Once again, an outside reversal week. Going over to the daily chart, once again, this volume is going to be skewed, and we see basically that same pattern of selling off right after that gap up on the CPI reading, and we're rejected at that 200-day moving average area, and we're below declining 200, 21, and looks like flatlining 50-day SMA. So in terms of the trends, we're basically down or just mixed on that intermediate term time frame, and I don't like how we weren't really supported at this key level. Yeah, that's basically the low of this range as well as the high, the pivot right here. So we'll have to see what happens from this point, but so far we are rejected at that key area as well as that declining trend line. So going over to the 60-minute, very similar. I won't go through it again, just undercutting the lows of this range. Yeah, nothing too much to be excited about in terms of that short-term trend. Going over to the monthly chart, just for some big perspective, you can see that these are the previous large corrections that we've seen in this index, and right now it looks like we're going through another more extensive one right here on the monthly. We're closing at the lows as of this moment. Obviously we'll have to see how December closes to be sure, but looks like potentially we're going sideways more than down as of this moment, but that could definitely change very, very quickly. So once again, be ready for anything. That's pretty much my overarching message in these videos during this bear market. Be ready to the upside, be ready to the downside, and make sure you're managing risk above all else. So that is the S&P 500. Let's move on to IWM. And this is the Russell 2000 index. And you can see once again, we're rejected at the 200-day SMA, and we're below the 21 and 50, as well as that 200. And if I could draw this line here, very similarly, we're rejected right at this area. And yeah, nothing too much to speak of here. And the same negative reaction to the news events from this year. Looking at the IWO, the Russell 2000 Growth Index, very similar action, rejected at the 200-day moving average, as well as that downward trend line. Let's go over to a weekly chart. You can see that this correction really started even back in this area in February, really took hold in basically November of 2021, and we're just continuing to trend downwards. And right now are forming subtle higher lows, so that's constructive for the most part, but we're breaking the short-term structure a little bit recently, and we'll have to see whether we test this key level or even this key level. Keep an open mind. We could definitely retest this level and just be ready for anything, as I'll say one more time. So that is the IWO. Moving on to the FFTY, this remains in a downtrend, and people might ask, does this show that CanSlim doesn't work? Because the FFTY, the Innovator IB50 ETF, is performing so badly this year. That's completely false. I mean, obviously, as a CanSlim investor, you're not going to be invested all the time in growth stocks. You want to be invested during the uptrends, not during these downtrends. That's when these stocks really get hit hard. And this just remains in a pretty negative trend, in a stage 4 downtrend as of this moment. And it just shows that you want to avoid these type of growth stocks when they're getting distributed hard and they aren't leading the market. So that is the FFTY, remains that downtrend. Going over to a daily chart quickly, remains below all the key moving averages, the 21 EMA, 50 SMA, and 200 SMA as well. Lastly, let's bring up ARK just for kicks. You can see it's also in a longer term downtrend. Looks like we undercut these lows recently, and remains below that declining 200-day moving average. Going to a weekly, we're in a stage 4, and there's a basically picture perfect stage 4. You've got it failing off the top, undercutting these key moving averages, trying to rally up, failing at this resistance level, and just stagnating before undercutting this and really starting a stage 4 downtrend. And that was all the way up at 107. The top, of course, was around 150. And you basically have a stage 4 downtrend, undercutting all these lows and going all the way down to around 34. And it doesn't look like it's over from this weekly bar. So we'll have to see what happens. Right now, the expectation from a lot of these charts, because this downside reversal, is that we continue downwards. But it would be a little bit of an expectation breaker if stocks, the leaders, as well as these indexes, act quite strong and hold near these lows next week, or even rally to the mid bar. And we'll just have to see what happens next week. So moving on, let's talk about a few of the mega caps, starting with Tesla here. This has been very negative. Looking at that weekly chart, it was very negative very quickly. And we're just basically trending below, declining 21, 50, and 200 SMA. We're in a stage 4 downtrend, and the RS rating is a 9. So definitely not a leader as of this moment. Obviously, this is subject to a lot of news and even some Twitter news, which I know, I'm recording this on Sunday, is happening a little bit. So obviously, we're in a downtrend, potentially oversold, and news events are going to affect this stock's price action. Moving on to Apple, also very negative, undercutting these key levels, breaking the short-term higher lows here below the 21 EMA, 50 SMA, and 200 SMA, and just not a negative look. We're holding above these levels as of this moment, but that RS rating is a 34 and just not acting super well. And this is kind of dragging all the indexes down with it. Moving on to Amazon. Maybe not quite as negative as Apple, but this is a weaker overall chart. We're in a stage 4 downtrend. We were rejected at that 21 EMA. We're well below a declining 50 and 200 SMA. So Apple is stronger overall. This also is weak and just in that stage 4, and we're holding above this level for the time being, but we'll have to see whether we test that in the coming days. So that is Amazon. Moving on to, let's go to Meta. Facebook. This has been rallying since this gap down here. We're back above those moving averages, but still not super strong action here. You can see pretty poor closes these 3 days, and we'll just have to see what happens. Right now, this is still in a stage 4 downtrend and isn't really a leader per se. Basically, if you're looking for relative strength in this market, you want to look for stocks that are holding above their 21 EMAs as well as their 50s for, at the very least, ideally above their 200 days as well. And any stock that's holding up right now, as everything else got hit hard, is subject to potential weakness next week as, those leaders are finally taken out. Something like TMDX is holding up pretty well, but it could easily weaken very quickly. So be ready and make sure your stops are in place. So that is Meta. Moving on, we've got Google. And looking at this, similar to Apple here, it's just in an overall longer term downtrend below the key moving averages and very negative action since that CPI reading. And we'll have to see whether we test these levels. So that's pretty much it for those mega caps. Let's also talk about NVIDIA here. You can see that this has been holding up better than most, holding above that 21 EMA for the time being. We'll have to see if it's supported here as it has been in the past, and if it can finally make it through that 200-day SMA. This is definitely a key area to watch as well, kind of the low 190s to mid 190s. That's a key level of resistance, and we'll have to see whether we can burst through that, break out, and potentially start a new stage 2 uptrend. But for the time being, just pulling back in the short term and having trouble with that 200-day SMA. Bringing up AMD. This is definitely a little bit weaker than NVIDIA. It's back below the 50 SMA, below declining 21, and wasn't even able to rally to that 200-day SMA. So not a great look from the mega caps. Those are definitely holding everything back, and we'll basically just have to wait and see what happens next week. Moving on to a few stocks from my previous focus list. A lot of these got hit hard and kind of pulled back. This is TMDX, which I mentioned earlier, holding above the 21 EMA. So that's probably a good screen for relative strength as of this moment. Is it above that key moving average, as well as an increasing 50 and 200 day? But we'll have to see whether, on a pullback in the overall market, if we continue to pull back, we find support at this key pivot. Does it respect that level? Does it try to form ranges around it? Does it respect the increasing 50 SMA? And we'll just have to use, that price action as a clue to what the institutions are doing with these stocks. But still track these relative strength leaders, because if the market does turn around, these ones that are holding up really well near 52-week highs are going to be the ones that bounce really nicely and could lead us out into a new uptrend. So yeah, that's pretty much it for this week's stock market outlook video. Let me know your thoughts down below on this market. And yeah, I hope you guys have a great rest of your weekend. And I'll see you guys in future videos. Take care.